Hello, and welcome to another update video on Bitcoin. So we want to talk a little bit about the Elliott Wave structure here on the daily chart, but also the exponential moving averages, which has sparked a little bit of a small discussion in our community chat. I think yesterday it was, and that's a really good thing. I saw a few questions on our Discord server, so let's address that in this video. Question was around some confusion, or the discussion was around some confusion around moving averages and Elliott Wave. And I mean, we need to see them as kind of separate, right? So what we talk here about every single day are the Elliott Wave structures, and they are very clear. I mean, I'm showing you here basically two roadmaps, yeah. And the resistance area, some support levels, which come from structural support, but also Fibonacci support. So I think it's important to understand we have Fibonacci support levels, we have structural support and resistance levels, which have been respected now throughout all of September. I mean, look, the market dipped here, yeah, to the support level. You might remember early September, I was watching with you guys for a bounce from here and a rally into resistance happened, and now we are back on our way to support. Now, Elliott Waves give us a roadmap. This roadmap is fluid. It is not a set-in-stone roadmap. There is always a bullish and a bearish scenario, and I'm not trying to predict movements necessarily. I'll tell you at any moment in time which roadmap or which of these scenarios I find is more probable, but probabilities can change. So the main benefit of Elliott Wave is not to predict the future. It is to give us pivots, support levels, resistance levels, decision points, essentially, and a way to measure reward and risk by giving us invalidation points and targets. Yeah. Now, one example. Yeah, what would be the invalidation point for the C wave down on the daily time frame? Well, it's the B wave top. What's the first target for the C wave? Well, it's 102K, the 100% extension. Is that really a good reward to risk ratio to short? No. Yeah, I mean, nobody would short that. I mean, maybe some people will short that with a different approach, yeah, or with a different stop loss, yeah, or whatever. But from an Elliott Wave point of view, from a structural point of view, to invalidate this C wave down, you would actually really need a break above the B wave high. So is it really a good reward to risk ratio? No. Yeah, that's what Elliott Wave tells us. So you wouldn't necessarily go here and go all in shorting this thing. Rather, it shows us we're approaching support levels. Yeah, because we are very close to the invalidation point of the white scenario, which is this swing low in September. Okay, at around 107,400. Okay, so rather a bounce appears likely, but then we have to dive into the microstructures as well. But yeah, we are close to this swing low. And this is an area where we had a bounce before. We just don't see that bounce yet on the smaller time frames. So the smaller time frames will give us some additional detail within this roadmap that we can watch closely. But I'd say probabilities for at least a bounce are quite high given how oversold the market is. Yeah. Now, whether that means we're breaking higher in wave 5, or it means we might be forming a broader B wave, or we're just getting a bit of a bounce within wave C to the downside, that is the stuff that, the market shapes every single day, and we have to observe microstructures to know as soon as possible what is likely unfolding and where the relevant support and resistance levels are. And that is what reminds us why scenarios are so powerful. Now, some people then got confused while I introduced, not introduced, we've been talking about it for weeks, but yesterday I showed, for example, again, to remind everybody, moving averages, right? The weekly moving averages, which we've been watching for the last few weeks. Especially here, the 21-week EMA in orange, 55-week EMA in white. Now, in the end, they are nothing else than some additional support levels. Support bands, you could say, support levels, we already monitor Fibonacci support and we monitor structural support. But these give us a high level point of view on the weekly chart. They are like trend filters, so they're just additional levels to watch, really, yeah. To just sharing these to help you really get all the data, yeah. Now, again, we are now at support. It's still holding strong. And that kind of is in line with the idea we could get a bounce, right? I've been highlighting over the last few days again and again that many of these coins are oversold on the 4-hour time frame. And the 21-week EMA is important because it kind of acts as a trend filter, short term. So it could indicate additional weakness when we break it, but don't think just because we go briefly below it, it's broken. This is really just macro, yeah. Some people have difficulties to switch between macro and micro. I mean, what we've seen before, look, below the 21, we've got the 55. So breaking below the 21 might mean we approach the 55 around 96, but it could just mean we briefly break it to then recover. We had it, look here, in August, the 55-week EMA. It was at 52K. We came all the way down to 48, 49, but it was not a weekly close. So you can get breaks, and that's when people start to panic, but it might just be a wick. So important to understand that these are more like larger degree macro trend filters, whereas what we're watching on the daily chart and the smaller time frame is much more precise, right? So moving averages is like, it's really nice to look, you know, it's like I don't know, it's like you get a really good overview on the larger time frame, but it's not precise. So anybody who's only using moving averages, it's a nice addition. So you get some additional levels to watch, some more insights about the market, right? Whereas anybody who wants to get precision should use something like Elliott Waves or lower time frame. The moving averages are not useful for traders, to be honest. They're more like something for macro investors to watch, okay? But because a lot of you are both, or we have macro and micro people, I'm going to show you both, right? It's just important to understand the difference. So let's take a look at the smaller time frame. And yeah, not too much worth, not too much time, I think, worth spending here, because look, the market hasn't really done anything yesterday. So this smaller time frame shows us for this C wave down, obviously a couple of roadmaps. So we might go down more directly, like 1, 2, 3, 4, 5, or in the blue count, 1, 2, 3, 4, 5. I think in the end it reminds us, what does it mean translated? Pressure is downward as long as we're holding below 115,939, because this smaller time frame reveals the resistance area for the C wave to the downside, and it's between 113,259 and 115,939. And also, you see the white scenario, which I find not very likely, because the move to the upside, I mean, it's not unlikely, but it's maybe the third most likely scenario, because this move to the upside was only a 3-wave move up. So still, though, from a reward to risk point of view, the bullish case is more favorable, right? It's just not high probability. It would be with a 5-wave move up, but we didn't get that. So from that point of view, there is invalidation for the white count at the September low. And so I'm watching if the bulls show up here to at least give us the wave 2 bounce. But so far, as you can see, this is more looking like a bear flag. But at the same time, we're approaching strong support, very strong support. I showed you that. So I think a bounce is very likely, right? Just the bulls haven't shown up yet. So I'll keep you updated about that. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure to check out our membership options. Again, you can join our community chat as a gold member, or you can ask questions in our member live stream. We're going to run that again tomorrow on Sunday. So typically I cover 30, 40, sometimes 50 coins in those live streams. Lots of additional benefits for members. Also, feel free to join us on X for additional charts, news, updates. I'll post a link in the description and in the comment section. Thanks so much. Bye-bye.